Safi. I am the Assistant Vice President for Guidance Residential, and I have with me Brother Mahmoud Kurud, who is our representative and account executive and future area manager, inshallah, in Minnesota. And we have Huda, who is our account executive too. And both of them speak Somalis and English, and Huda speaks Arabic too. So if anybody needs anything, I do speak Arabic too. If anybody wants to stop me and just, did not understand what I said, we will be more than happy to speak in the other three languages. So we go from there. With that said, Guidance Residential, just a quick information about Guidance, or quick history about Guidance Residential. For number one, Islamic finance in the United States. We started in the business 15 years ago. We are in 27 states right now, and we financed over $4 billion in home finance. And we are specialized only in finance or residential finance, no other things. We started with 3 states, as I said, in 2002, and now, alhamdulillah, we are in 27 states, including Minnesota. We've been in Minnesota for over 11 years now, so we're not new to the market, but we are new to what we wanted to do, and my background is 22 years of mortgage business. So what I wanted to do, I wanted to introduce the first-time home buyers. How can you be a home buyer? How can you have that dream of owning a piece of our land, or in the United States? How can you be an active resident in the United States, especially owning a property and owning a home? I know there is a challenges for people who wanted to buy a home. They do not understand the process and the concept, but with our very well-educated account executive and a company that has been doing business, especially for Islamic finance for so long, we will be more than happy to take you through the process, explain the process with you, what do you need to do, how you prepare yourself to be a first-time home buyers, and then we have a lot of agents in here, experienced agents too, who can be referred you guys to these agents. They can also work with you too. With that said, I'm going to start the presentation, and as I said, please let me know if there is anything that you want me to stop and explain it more. I'll be more than happy. Questions we'll take at the end. I can speak to you, and if you have any confidential question that you want, you want to run any scenario by me or by my team, please let me know. What's the reason for anybody to buy a home? Why do I want to buy a home? I can be rent and stay in rent all my life, but why do I buy a home? First of all, buying a home is wise as a long range. What that means? That means when I am renting right now and I stay renting, the money is going to somebody else who's going to pay his mortgage. I'm just renting that space from him. I'll pay the rent. He has already calculated his mortgage, his taxes and insurance, and I'm paying that in his behalf. Although, yes, he's giving me a roof over my head, but at the end, I'm not going to own anything from that property. The second is increasing the value of the home on time. Meaning, if I buy a property right now, and mashallah, the market is very good right now in the United States, in 5 years, 2 years, 3 years, 5 years, 6 years, 10 years, I'm building equity. Meaning, if I buy the property for $100,000 in 5 years, there is a possibility I'm going to sell it $180,000, $140,000. It depends in the market. So with that mean, I am building equity in that property. There is a lot of benefits comes with when you own a property. The number one benefit, that the tax benefit that you get at the end of the year when you file your federal taxes. The federal government will give you a tax credit for your profit that you made annually. So there is a lot of reason why. Of course, stability is number one. When you own a property or when you own a house, you're more stable than jumping from renter to another rental, depending on that landlord when he's going to kick you out or he's going to raise that rent on you. This is your home. You're going to take care of it. This is piece of like, your home is like your kids. You're gonna take care of it as much as you can to keep it safe and everything. So there is a lot of reason behind why you wanna buy a home. As a first-time home buyers, there's a lot of questions. And, just from experience, these questions are always asked. Everybody that wants to buy a home, the first question is, how much I can afford? This is the first question. How much I can buy a home? I want to buy a home for $200,000. Can I afford that? And of course, I'll explain that in detail. I'll go through the questions. How important is my credit? Is my credit important? If I have credit, I do not have credit. If I have a good credit, bad credit, excellent credit, of course, this is all a factor of any finance you're going to do. How is my credit history? Or my credit history, is it important? Yeah, it is. And I also will go through that. How, credit history is important for a first-time home buyers. And how can you effectively maintain your credit, and how you effectively can open a credit without hurting your finance. How can I improve my credit? There are so many people who come to the country and they do not understand of the credit, or what's the meaning of the credit, or how can they use the credit. How can I do that? I will answer these questions. How much do I need for my down payment? I do not have $100,000 to put for this home. How much is down payment is required from me? And I'm going to answer that too. How about closing costs? When you buy a home and you want to close in your home, there is something called closing costs, which is there is like a title charges. The title is the piece of paper who they will write your name on it and say, Mr. So-and-so now owns that property. So there's charges for that. What's the total charges? We will go through it too. Again, how many finance I can get? Now I have my down payment. How much you guys can give me? And this is all depends on your income and your credit. We will go through it immediately. What's the difference between I'm giving you a pre-approval and a conditionally approved? I'll explain that. What does my monthly payment contain of? What is, I'm paying you this payment. Where is it going to go? Where is the payment going to go? How much is going to go? Who's going to take that payment? I will explain that too. So there's always these 9 questions that for the people who's first time buying a property, they're going to ask, or it's in their mind. And I will address that. And if there's any other questions that you guys have, I will be more than happy to address. So for any finance company or any Islamic finance, non-Islamic finance, to determine your finance or the maximum finance you're gonna get, they're gonna look at 3 things. They're gonna look at your credit history, and then they're gonna look at what is availability, what's the down payment that you're gonna put, and how much you can put. And the other thing is the existing debt, meaning what else you have. You have the mortgage payment. What else with the mortgage payment? Do you have a credit card payment? Do you have a car payment? Do you have student loan payment? Do you have alimony? Do you pay child support? So they're going to look at all that. And the reason they do that, they don't want to put you at risk. They want to make sure that you can afford that payment. So they're doing all of that in your benefit as a customer, as a client. They don't want you to be, okay, we will give you this, how much, and then you cannot afford it. At the end, you cannot afford the payment, period. How important is my credit? Your credit is very important because we're going to base the finance on your score and the credit score. The credit score in here, there's 3 things goes to the credit score. The first one is the down payment. If you have an excellent credit score, we can do payment up to 3% only. If you have a 680, we still can do 5% down payment. If you have less than that, 660, 7%, you know. But if you go down, we will accept 620 as a credit. This is the minimum credit we will accept as a credit, a 620 credit score. And the reason is, and I can explain to how you can improve your credit. It's very easy to improve credit. You do not have to go to the attorneys or credit repairs or anything. It's few steps that you can improve your credit score, and it will go up, and inshallah will be able to finance your home. So it depends on the down payment, how much the finance amount we are gonna finance, and also the rate. How much is the rate that you're gonna get, or the profit rate? Why my credit score history is important? Because we have to base our information on the history that you took, or you used your credit and you paid it on time. So we will make sure that also, again, it's in the benefit of the customer. We have to make sure that you can pay your payment. We are not putting you in jeopardize. We are not jeopardizing you and your family. We cannot put you in a home for 2 months, 3 months, and after that tell you, get out. You're not, you cannot make your payment. We will never do that. So there is a lot of things that we look at. The most important is the history of the credit. Now, I know there is a lot of people who sometimes have collection with medical. You go to your doctor, you have insurance, you have a good insurance, but still he's sending you these bills, and your insurance is taking their time of paying it, so the doctor sends you to collection. The medical collection, usually we do not really look at it cheaply. The most important for you is to be on time on your credit card, in your card payment, and the most important is your student loans and utilities, if you are paying your utilities while you are renting. Student loans is a federal loan. And please make sure that whoever is paying the student loan pays on time. If you cannot pay it on time, you can always call your student loans association, and they can reduce it within 30 days. So let's say if my payment is due today, and today is the 23rd of March. If I do not make my payment by April 23rd, we can report it to the credit bureau. And then your credit is hit with a late fee. How can I establish and improve my credit? The most important, if you're owning a credit card, whatever you're owning in your credit card, what is the limit in your credit card? If your limit in your credit card $10,000, do not charge anything over $5,000. Anytime you are charging or exceeding the 50% from your limit in your credit card, you are at risk. That means you're at high risk now. You're charging extra. And again, I'm gonna just explain that plain English, as they say. When you take money from somebody, try to first of all make your payment on time. And in time means on time, because whoever is giving you this money is respecting you first, and then expecting that you're gonna pay it on time. Now, even if these credit cards give you a limit for $20,000, $10,000. Yes, they want the money. Yes, they want you to use their credit card. But be smarter than them and never ever charge anything over 30% from your limit of credit cards. Anytime you're gonna do that, your credit score is gonna drop. The payment on time is very important. Very, very important that you do your payment on time. And then, if you're looking for a home, and you have already a contract in the home, and you have a finance going, please do not go buy furniture. Please do not go buy, refrigerators, appliances. Don't do that. Because now we would know. Maybe you're qualified before. Now we have a payment of $200. Now you're not qualified. So please, in the process of you are looking, or you are in the process of looking for a home to buy, and you are in the process of doing the finance, please do not go buy anything. And if you are, please consult your account executive consult your agent. Most of the agent knows these things, and I know that most of the agents very well in in finance. They know very well in finance. Don't say nobody told me, because this is the first time that we consult our people and say do not buy anything during the process. Do not go buy a car too. Now I'm gonna buy a home. Now I'm gonna buy a car for my wife. No, buy the car later on. That's not quite if you're doing the process. Do not close any credit cards in the process. Or if you are in the process of buying a home and you're thinking, oh, I have too many credit cards, I'm going to start closing one after another because I do not use them, do not do that. Anytime you open or close a credit card, your credit score is going to go down. It depends what company, it depends where you're going to open that credit card, and believe it or not, the smaller company like JCPenney, these smaller, credit cards for $500, $600, who's going to hit your credit more than Chase or Bank of America if you are using them? So please do not close or open any credit card period through the process when you are trying to buy a home or you're trying to do the finance. How much I need for the initial down payment? Initial down payment in here is the down payment. How much that I would need to put down payment to buy that house. And this is why we have first-time home buyer seminars. To inform you guys that what you need for first-time home buyers, if you are a first-time home buyer, what you need is only 3% from the purchase price that you're purchasing. Meaning, if I'm purchasing a home for $100,000, all I need for down payment is $3,000. That's all I need. If you are qualified, that means you have an excellent credit. And that means your income is going to be enough to cover your payment. Again, we will calculate the income. We'll take your income and calculate all your debt and make sure that we are not putting you at risk. But yes, we can do finance 3%. I know maybe some of you are very familiar with FHA. FHA needs 3.5. Now we have a program better than FHA that has only 3% down payment. And yes, you can do 5%, you can do 6%, you can do 50%. But the minimum down payment that we're asking is 3%. The closing cost, as I said, there's always, when you are buying a home, there's always a closing cost. And the closing cost, counted on your title charges, your property tax, because you're going to pay property tax on this home that you're buying. The insurance, the appraisal, because we're going to do and ask for an appraisal to make sure the value of the property is valued at what you are writing or what are you buying that home for. So there's a closing cost. Usually the closing cost, it's from 3% to 7, up to 7%. Meaning, if I am buying a home, and depends also on the title charges. Again, as guidance residential or as a financing, you do not get involved in the title. The title is either ordered by the real estate agent or by the seller agent or by the seller himself recommending a title company. But usually it's from 3% up to the maximum is 7%, and there is a lot of states who put restriction on the closing cost. Meaning that Illinois state has only the maximum that you can charge the customer is 5% from the purchase price or the contract price. And again, we can, the agent can help you with that. You can always ask the seller for the to help you with the closing cost. There's also other way of helping with. There's assistant. There's state assistant. There's city assistant. We can work on all of that as soon as you're approved. How much finance I can get? Again, as I said, we're going to take all your liability, meaning credit card payment, student loan payment, car payment, credit card payment, and then take your mortgage payment, and take the property taxes and the insurance, put them together, and see how much is your liability monthly, and then take your income and make sure that you can afford it. In some cases, we can go up to 45% from your income to qualify you. In some cases, if you're putting 20% down payment and you have an excellent credit, I can go up to 49.9 ratio to approve. Now, it depends. It's cases by cases. There is a lot of things to be involved in there. It's a lot of work for us to make sure, again, it's your benefit to give you that payment. This is benefiting you. We will never go higher and not, maybe not qualified or put your rescue and your family for higher payments. We will always discuss that in details with the customer. We give the customer options. Okay, you're qualified for 200,000, but you can go up to 200,000. You can get 180. There is your payment. You can get 160. And when we give that pre-approval, it is sent immediately to the customer. And if you want us to copy your real estate agent, we can do that. But your real estate agent understand when we send them that pre-approval, you are approved up to this amount and this your down payment. If the agent always have any questions, because the agent like to help a lot, I know. I've been working with agents for 22 years, I'm sorry. So if your agent has a question, of course, we can answer all these questions. So usually what we will take is the gross income for employee people. Whoever is employed will take this gross income because we know it is already paid his taxes automatically. For self-employed, we will take the net income. We have to look at the net income for self-employed. And again, as I said, there is other program that I can use, can extend that. Debt ratio, what they call it, which is your income divided by your all your liability. We can work on that and we can approve you for higher. What's the difference between a pre-approval letter and conditionally approval letter? Let's say you right now give your information as an account executive. I'll set immediately and 10 minutes. Just take your initial information. Initial information will be your name, your last name, your date of birth, your phone number, your email address, and what are you looking to buy for, and then I can qualify. This is what they call pre-approval, and usually we do, as guidance residential, run it through the system to approve. So if this comes approved, you should not have any problems later on. But there is difference too when I give you a conditionally approved. A conditionally approved means the underwriter did already verify all this information, and she said, yes, we're good to go. Just get the title and the appraisal and let's close in this file. Again, we are trained as an account executive guidance residential to automatically qualify the customer. If the account executive says there's no problem, you should not have a problem. Because we run it through the same system that underwriters run. The last question is, all the time I'm asked, okay, I'm going to make a payment. What this payment contains? What is it included? Can you tell me what's my payment included? Absolutely. Your payment will be included the acquisition, which is the principal that you owe, and then the profit rate, and then the taxes and the insurance. Taxes and insurance is something that nobody has control of. Insurance, yes, you do, because you can shop for your insurance, but the property taxes are given to us by the title company and the county that you live in. They assess your home every year and they tell us what the taxes and the property. So we have nothing, we have no control of it. But the payment as principal payment first, and then the profit rate, and then the property taxes and the home insurance. Guidance residential to make this contract halal. We have to work our property in something called LLC. Each property that we close in the United States, we put the property in something called LLC, which is Limited Liability Corporation. How can I qualify? The first step, of course, is talking to an account executive, giving him your information. He will work in your pre-approval, as we said. And then, after your pre-approval, you will find a real estate agent. Sometimes the account executive work with a lot of real estate agents. They can recommend somebody for you. But the first step, again, is to talk to the account executive in the room, myself too, and see if there's any questions I can they can answer and give them more information. Again, to start the process, the first thing that you're going to start to see if you are qualified. Are you I'm qualified? They're going to look at your credit, your income, all these things. They will tell you yes. Miss so-and-so, Mr. So-and-so, yes, you are qualified. Go ahead and get started looking for the home. There is no point of looking to, working with real estate agents if you do not have a pre-approval. Because you know what, even the real estate agent is going to ask you, did you work with somebody? Did you check your credit? Are you qualified? The seller themselves, before they are, going to sign on that purchase contract and, agree on the selling the home, they want to see a letter that you already want to, a lender, and you are approved by this lender to buy up to the amount. This is, again, going back to what you're spending. Do not go crazy because you're buying a home. Do not go buy a car, buy, furniture, new furniture, all of that. So just stay calm until you close in that home, and then you go crazy. Again, it's very important, and we have a lot of cases, and this is something also that the real estate agent in the room will agree with me. We are in the middle of the process, and somebody comes and say, I had to do that. My wife wanted me to buy this. Again and again, please. This is an issue that we face every day, and it's something kind of education that we have to educate the new owners or who is looking. Do not go crazy, do not spend, do not notify your agent, notify your account executive if you have, lost your job, went and charged high amount in your credit, all of that, so they can be aware of it. Do not make it a surprise for them 2 days, 3 days before closing, and then after that, we cannot close or do anything. Again, you can go to our online. Instead of going to our online, we have, mashallah, 2 of our account executive who can speak to you. If you have questions, you can call also that 1866 guidance. Ask to speak to an account executive. We are here to help. And if there's any question, I'll be more than happy to answer them. But before I would like Mahmoud, if he wants to speak in Somali for the people who maybe did not understand.
Assalamu alaikum warahmatullah. كل presentation مدرة يوجد بحيمة كبتي official about Chicago So basically, someone has a question I can take one-on-one later on. So we can do it now.
No problem. Good luck.
Accounting part. I just wanted to clarify a little bit about the Islamic part. Why that's the issue in Islamic finance. Okay. As we know, if you want to buy a house through the bank, you will go to the bank, you have 10% down payment, for example, and the bank will pay the remaining 90%. Then they will add up the interest. So you end up paying that loan. So the interest is the part that we will not allow in Sharia law. So the Muslim community, since long time ago, since early 1950s, they came back and they put the concept for Islamic finance to buy home, to buy a car, to buy through the Islamic finance means. So the first concept was sell, rabha. So you can buy something, then resell it with a profit. So that started with cars, it started with small business, it starts with tools. When it comes to homes, the problem arose after that. The problem was, I'm a bank, you don't have the money, you have only 10%, I will tell you I'm going to buy the house for you, for example, and they will resell to you with a profit. That's allowed. Profit is allowed. Out when you come and want to sell the house after 5 years, you have to pay the upfront deposit for the tax, which is not fair, which is not allowed. That's why that concept was shifted, and it started shifting in mid-80s. So they came out in late 80s, 1987, they came out what is called musharaka mutanabisa, which is declining ownership, or musharaka al-milk. So guidance residential is based on musharaka al-milk. It means when the client wants to buy a house and they don't have that amount, guidance and the customer will buy together as a partnership as musharaka al-milk. Then the owner of the house will stay in that house. However, guidance will take a rent payment for the remaining, for the part that the owner stays. So the owner, this is the house. It's 100,000. The owner is only 10% only. Guidance owns 90%. So every month, for example, you will pay $500. That $500 contains two things. First, some part of that money, it goes to equity. You are buying that equity. Because you don't want to stay all the time with 10%. Every month you have to buy a small percentage. And the other part will go to the rest. So that's the salary, that's the profit for guidance. So that is allowed. So you can Google and see the declining partnership or musharaka al-milk, musharaka mutanabisa, and that's the only way which is allowed so far. After that, if you want to sell your house after 5 years, you can do that and everyone will get their percentage. Guys will not come after the profit, will not come after the recourse. So just to clarify the difference between the concept, the partnership concept and the sale concept and the professional, the loan or interest-based. If you have any question, I'm willing to answer. Yes?
I have a question. So when there's equity in the home and the market's good, it's easy to do that. You can get your money, you can sell the property, and everybody gets their share. When the value goes down, like we saw with the economic downturn, and you bought a house for $300,000, but economic downturn happened, the house is now worth $150,000. You only paid $50,000 back.
No, I'm not understanding the question.
No, I'll put it this way. So, I buy a house for $300,000. I keep making my payments. I pay about $50,000 back. I still owe $250,000, right? And then a downturn happens. The value of the house goes down. Now the house is worth only $150,000. I felt like, this house is only worth $150,000, but I owe $250,000. I can't make my payments.
But you won't pay $250,000. You pay the percentage. You're not paying back $250,000.
But I borrow the money from the bank.
What he's saying, I understand.
So how do you approach that? How do we share the loss?
Okay, if you're staying in the home, there's no loss. You're still making your payment, but we're gonna help you reduce your payment. By doing Obama program, by doing whoever program is, okay? We're going to reduce your payment and make sure that you can still make your payment. Your income did not change. Your value changed. We have a contract between me and you that we share this home. You still can make your payment. So if the income did not change, we still can refinance you, lower your payment, and make sure that you're comfortable. Now my question to you.
What are the income changes?
We will help you too. There's other programs. But my question to you, after 5 years, if the market did not crash and instead of $300,000, you made and you sold that house for $375,000, do I come and share that profit with you?
Go ahead.
No. It is profit.
Well,
So what's good for you is not good for me? Okay, I don't. And the reason is, because you are paying a rent for me every month, but the rent that you're paying, you're buying shares. See how good is it? Our Islam covered us already. Long time ago. You are buying every month with that payment, you're buying your share. You started with 50,000, you said? At the end of the 5 years, maybe you have now 120,000. But now, if you cannot, if the market crashes and we were able even to refinance people in 150, LTV, which is loan to value.
Sure.
So we will help you. We're not here to, again, we were not here to put you at risk. And it's completely different than other traditional lending. Yes, sir.
I think we still want to answer though, because that question comes up a lot. Bottom line is, forget about working out a deal or something. If I still want to sell that home less than how much I owe, do you still demand your balance, or you're going to switch? So let's say I own 20% of that home now, and I want to sell it, and the market is only going to pay me $200,000 for that home. Do I get 20% of that money? Or are you going to say, well, our loan balance is still $250, so we need our full money?
So may I just ask another question?
Yeah.
Why would you sell your home less than the value?
No, that's the market.
Why did you wait until the market goes up? Okay, we had that issue from 2010 until 2012, if the real estate agent can help me, right? But after that, from 2015 until now, we have again in the market of what? 14%? So why would, if I can make my payment.
14% here.
Over here, thank you, sir. So if I can make my payment and nothing changed, why would I go sell my home less?
People move. I'm talking about, it could have been when you could have sold your home in 2009 or 2010. This is a true story. It happened to a lot of people when they were underwater.
Sorry, my income changed. I can't make the payments anymore.
What do you do? Do you owe? Do you say? Do you demand your full balance? I think that's a
Absolutely, absolutely.
Okay.
You know why? Because you are not enforced to sell. It's your choice to sell. And I had a contract between me and you saying that yes, finance me.
But that's the question, right?
I'm gonna explain it to you, okay? If you're thinking that this is a contract between me and you, right? Based on a contract, what made it Islamic Sharia compliances? There is a contract between me and you. If I come and break that contract, you're gonna ask me to pay your home fully. If you break that contract, of course, of course.
And I think that's.
But there is two ways of we will share the risk completely. We will share the loss with you completely. If eminent domain, which is the government comes and say, I'm gonna take your house and make a street because it's public street now. Whatever they pay for the money, if we lose, you lose, and we are completely. If there's a hurricane, it's out of your hands, something happened out of your hands, we will share the loss. But again, if you decide after a year, I don't want the house, the market's losing, I'm getting out, of course. Of course. But who would come after that property, not your asset? Any other? Yes, sir.
Assalamu alaikum. My name is Ahmed Fahd, was a real estate. Can you touch a little bit about gift money?
Yes.
The down payment?
Yes.
As you know, we use
absolutely. Thank you for reminding me. We said we can qualify people with 3%. It does not have to be your own money. This 3% can be gifted from a family member, and only family member. So, me and brother Ahmad, he's my brother, and he wants to buy a home. And he does not have a 3%. He comes to me and says, sister, can you give me a gift for the down payment? Absolutely. Your down payment can be gifted completely. It does not have to be from your own money. It has also a policy to follow. So if I'm your sister, I'm going to give you the down payment. It has to be tracked. I have to have a bank statement. I have to have the money in my bank statement. I have to give you, my check under my name, saying I'm going to give this gift for. It cannot be cash. Period. So if I have money under the mattress, I'm going to give it to brother Ahmed. It's not going to work. It has to be sourced. That they can come back and say, "Hey, did you give a gift to Ahmed?" Yes. How did you do it? You can do, wire transfer from my bank to his bank under my name and his name. You can do a cashier check. You can do a personal check, but it has to come from a bank. Did I answer your question? Yes, go ahead.
I need a translation for mine.
You need a translation in Somali? Yes. Mahmoud. We'll take translation after that.
So I gift money.
wixii in laga hadlo maanta aad ugu soo Soomaaliya
waxaa soo dhan kuma bixin
waa ugu haraynaa marka dad badan aad jooga hal mar kalaan aan duubaynaa Soomaaliya waa ilaahay
Continue?
Yeah.
Yes, ma'am.
If you're doing equity shares, what is the usual payoff time when the owner would own 100%?
As soon as he finishes his what he owns.
But
There is no prepay penalty.
right,
There is no restriction of you paying it early. So let's say me and you are on guidance, you are the customer. You took 100,000 from me. Okay? There is installments, monthly installment. That this, as I said, some of the payment will go towards the principal, which is your own, and some of the payment will go to utilization, which is rent. Now you come after 2 months, 6 months, 1 year, 5 years, and say, thank you very much, I don't need your finance anymore. Here's the money. You will pay what's your standing balance.
but if I stayed in the house until it was paid off,
Okay,
what is
30
that?
years, 20 years, 15 years, we can do 30 years, we can do 20 years, we can do 15 years, we can do 10 years, 7 years, exactly like the traditional. Anything they have under our rate, most of the time is lower. Any other questions? Yes, sir.
My name's Hatim.
Sir.
Question about the 3% program. So do you still have mortgage insurance with that product, or is there mortgage insurance involved?
There is a mortgage insurance in that product, but it's lender-paid mortgage insurance. Because of the context of our contract, because we are partnership and it's declining homeownership partnership, we have to go out and pay cash money and pay the PMI for you, and then we itemerize that on the payment. So it's lender-paid PMI. We do not. It's not a separate. We do not go to a separate PMI company and buy it. We do not. Yes. Yes. And the next. Okay. Yes. Yes. Absolutely. So. Absolutely. And by the way, the first-time home buyers is a staff for you to talk to us. They can tell you what can be qualified. So next year when you're filing your taxes, you know that you need this amount of money. So Rashid wants me to talk about self-employment, and I will be more than happy to cover this. So as a lender, when you are employed, first of all, I'm going to ask you for your tax returns, your W-2s, your pay stubs. I'm going to base my information on the last 30 days pay stub. This is if you are employed. You have a company, you know, the company, you are employed with a company, there's no issue. If you are self-employed, we're going to look at the last 2 years of business tax returns and qualify on that. Meaning, because the tax is still due in April 15, we're still asking the customers to give us 2014, 2015 tax returns. So for example, if I made 32,000 in 2014 and I made 20,000 in 2015, I'm going to average that my total income will be only 52,000. And I'm going to divide the 52,000 by 24 to qualify you, because you're self-employed. Whatever you bring to the government, I'm going to take it. Now, there's gross income and there's net income. The gross income is what you're telling the government that you made, 100,000, 50,000, wherever you made. But after all the expenses that you're going to add as a self-employed, and you understand, taxi drivers, you know, restaurants, whoever, they have gas, they have mechanics, toll pay, whatever it is, they're going to do this expense. At the end, there is the net income. So when you're talking to your CPA, make sure before you go on your taxes, you're talking to your account executive. As a self-employed, I know you can maybe sometimes not deduct this, maybe sometimes deduct this, but your account executive will be able to tell you, okay, I need your income to be in this range for me to be able to pay.
You just need to tell your accountant, CPA or so on. Just tell them.
or accounting even without you knowing, they do something called depreciation. This is an add to your income. So even if your net income was only 20,000, but you have a depreciation of 5,000, 6,000, this is added to your income. This is giving you a lot of the income, more income. So with that said, we can always, and the best time is when you start looking for houses is before the taxes. Because now you're going to file your taxes, now you will know what you're going to file, you have already all your expenses, you can talk to your account executive and the CPA, and they can tell you what numbers they need to see. Yes, sir.
Maybe I was running late, so I don't know whether you explained it or not. I want to know the significant difference between profit rate and interest rate in detail.
You want to know the difference between interest rate and profit rate?
In detail.
Okay. When you say interest rate, what's interest? It's if I give you $100, and I tell you, my brother, next month I wanted $200. Is that, I'm taking interest on the $100?
That's an agreement between the two
Absolutely not, sir. In the Islam, there's two ways to give you money. Al-Qard al-Hasan, which is if I give you $100, you're gonna return that $100 to me exactly, not even one penny. Or the investment, which is we do. But for traditional banking, when you go and borrow, the difference between our contract and the traditional banking is when there is a note. You sign a note in the closing. This note says that yes, Mr. Muhammad bought the house for $100,000. His payment is $800 a month. He's going to return that for me $350,000. And that's what riba. Right?
So,
correct me if I'm wrong.
So there is no note in
We have no note.
no note.
This is a
Partnership.
This is a partnership. You and guidance are buying the house together. Okay? All what you're gonna sign at the closing is obligation to repay. Meaning, yes, I am partner with Guidance Residential. Yes, I took $100,000 from them. Yes, my payment is $1,400 for 30 years.
Okay.
That's what's the difference in the contract.
Okay, I understand.
Yes, sir.
It's very different. And interest there is a note and profit rate.
That's not only the difference, the note itself, it's what making it halal and haram. Yes.
Okay. For example, I am making monthly payment. So for example, if I get a loan of 100,000,
Yes.
I will for 30 years. Then my monthly payment
Would be $560.
something.
Okay.
Yeah, say 500. That 500, maybe 400 we go to the profit rate.
No, absolutely not. The profit rate or the payment, how much the payment is going, is depending on how much, first of all, you're putting a down payment. All right? The down payment is the one which plays how much rent, because that's, again, sharing. When you come to me and say, I want to buy 100,000 home, I have 30,000, I want your 70,000, that means you have a 30,000 stake in that house. And this is will play in your payment and how much is going to rent and how much is going to principal.
So, my monthly payment is 500,000. How much is going into my principal and how much is going into the balance?
And we will give you a full accumulation schedule for you before closing to tell you that first month, $200 something going to your utilization. 200 something will go to your principal. You have to understand, every month, it's more money going to your stake or to your share. And we are losing. You're the one who's gaining because it's less money coming to us every month.
Okay. Also, if I'm going to market like funds, there is someone going into my...
Yeah, but you wrote something called haram. You wrote a note. Okay.
There's some money going into the principal.
No, I understand, but I understand, believe me, what you are. Yes.
Let me please ask, I think for developing methods, proportionately, make that exactly the same amount for depending on the the proxy is that proportionately goes to them and 10% for this share and then 30%.
Okay, I got it. What goes to his principal, what goes to his utilization, depending on his down payment, as I said, and his credit score. See what I mean? So for a person who is putting only 10%, yes, of course, his share is 30%. So his rate is less than the guy who's putting 2%. Absolutely. It's a share.
Also, keep in mind because 30 years, declining my share.
It's going up. We're losing your gain.
It's going up. So at the end of, for example, you take a house of 100,000. At the end of 30 years, how much that money will be?
Can I ask the agent in the room how many customers stayed in their home 30 years, guys?
Less than 5%.
Let me get to the point, please. I know where he's going. Okay. So if I am buying a home right now, would I be staying in that home for 30 years? Okay, when I sell that home, okay, and I bought it for 100,000, but I'm selling it for 140,000. Does Guidance Residential comes and say, hey, you broke the lease. You're supposed to have it for 30 years. You're now breaking it. This is the contract between me and you. You're breaking it. You cannot do that. Absolutely not. You are free to sell it. You are free to stay in it 1 year, 2 years, 30 years. But when you sell it, what's the profit that your property from there? It's going to you. So now you're asking me, what's my profit in 30 years? You're the one in control, not Guidance Residential for your renovation. Complete. You are the one in control.
So, for example, if I buy a house of 100,000, in 15 years, I make all this 100,000, but my contract was 30 years.
So how did you break it that you're making only 100,000?
If I make 100,000 in 15 years, is the house
Okay, so I'm sorry, because the people are talking. I just want to engage everybody, guys. Allow me, please, because this is very educational for everybody. My brother here is saying, I bought a house for 100,000. I took it from you a finance for 30 years. The agent in the room, if I stay in a home that I bought 100,000 in 30 years, what do you think the value? Just estimate for me. The value of the property will be after 30 years. 300. That answers the question. So whatever I made from you, you're paying, actually you're living for free if you take it in the other way. Any other questions on that?
I think his disconnect is the money he borrowed, the money he's borrowing, he's paying back every month.
I'm sorry?
I think he's missing the fact that the money he's borrowed from Guidance, he's paying it back every month. I think he's missing that connection. Oh, okay.
Yes, yes.
I think it's asking the question.
Yes.
What's the difference between saying what you do? Like you say that profit, money,
He just asked me the question.
He asked you that exactly.
Yes, he asked me the question.
So we didn't hear that.
Okay, that's fine. I'll explain like that. The interest rate, what is haram? And I'm sorry, maybe I can translate that to you and to what haram? No, we're talking about financing. I'm not sure to get you want to think about we're talking about finance only. Let's talk about financing. What is the interest? What's the interest? What is it? How can I make riba from you?
Like we say, when I buy you something.
No. I'm not buying you anything. I'm giving you money.
Yes, you need money. In return, I need more.
I'm giving you money. Do you have a dollar? You don't have a dollar. Can somebody give me a dollar? I have a dollar.
If you give me back $2. If you give me back $2.
What's the value of this? Everybody, what's the value of this?
100.
What does $1 buy me?
Water and drink.
Not much.
But, hold on, you're very quick to take my money. It's a dollar. Okay, then I give it to you. After 1 hour, I give it $2. You answered yourself.
No, I know.
So when we exchange money with money,
You don't get it.
no, I do get it, but you are not walking with me.
You give me money.
And that's the difference between us.
You will get $150,000.
The traditional bank, they give you money. In the closing, you sign paper for the mortgage note. Say, Mary, 100,000. Mary, in 15 years, she's going to return 300. With our program, you do not sign a note saying that I gave you money. Under our, you came with the down payment, $8,000. I came with $97,000. That's what I said, $3,000. We're buying a home for $200,000 because we're back. We cannot afford it. This is what we can afford. Yes, okay? So, 100,000. You have $3,000. We gave you $3,000. I came with $97,000. We put them together. You went to agent and say, we can buy the home. You look at contract, close in the house. Now, me and you are going to. I wait to get you. So every month you're going to make me $400 payment. What you took from. Clear? Now, every month you're going to make that $400 payment. Some of the money is going to go to 97,000, and some of the money is going to go. Let me finish this. Please. Some of the money is going to go to the marriage, which is and I'm living with you in the house. If I live with you in the house, and we bought this, and you paid me only $3,000, and this cost me $100,000, I'm going to tell you, you can only use the corner. The rest of the house is mine.
Oh.
Yeah. True.
There is a lot of things to it. So, if I do that, you're going to be standing in the corner doing nothing.
Okay.
I'll be enjoying the house. But in this case, I'm telling you, the house is yours. The time is enjoy the house. Have a party every night.